Okay, let's unpack this. Today, we're diving into a really fascinating corner of the luxury market, cruising mega yachts.
Yeah, it's quite something.
We've got this report here from Cognitive Market Research, and basically, our mission is to pull out the key data points, the insights, really get a handle on this market's landscape, where it is now and where it might be heading.
Mhm.
And the big headline right off the bat from this source, it suggests, well, a pretty significant growth trajectory ahead.
It really does. And what's fascinating looking at this source is the sheer scale we're talking about. Globally, this market was generating sales revenue of just over $7 billion back in 2021. $720.04 million to be exact.
Wow.
7 billion.
And the report projects that number climbing quite a bit. It's expected to hit over $8.7 billion by 2025.
Right.
That's $706.5 million.
Right.
Looking even further out, the forecast runs all the way to 2033, predicting a valuation of $392.2 million.
13.4 billion almost. So if you track that from 2021 to 2033, well, it's almost doubling the market size globally, according to this source anyway.
Absolutely. It certainly paints a picture of a very clear growth trajectory for the luxury maritime sector.
Yeah, these figures really highlight that consistent upward trend laid out in the source material we've got.
Definitely.
So what does this mean when we start breaking it down? How does this global picture look across different regions? Let's dig into the specifics in the report and see where this growth is really concentrated.
Okay. Well, according to the source, Europe stands out right now as the largest regional market.
Right.
Back in 2021, sales there were already over $2 billion, $2056.87 million, and that's projected to reach over $2.5 billion in 2025, $2,567.63 million, and forecast to hit over $4 billion, $4021.8 million by 2033.
So that's essentially doubling the market size in Europe, too, over that 12-year period.
Pretty much, yeah.
And the report gets quite granular, doesn't it, on specific countries in Europe showing really strong growth, like the United Kingdom. Its revenue is shown growing from around $413 billion in 2021, way up to over $784 million by 2033. Germany's on a similar path, climbing from, $374 million to $764 million over the same time.
Right, very similar numbers there.
France is projected to go from about $286 million to $538 million, and Italy from $269 million to $540 million by 2033. So serious growth across the board there.
And what's interesting, the source notes it's not just those, major economies.
Okay.
Other nations across the continent, places like Russia, Spain, Sweden, Denmark, Switzerland, even Luxembourg. They also show consistent and pretty significant growth from their 2021 figures right through to the 2033 forecasts.
So it really suggests a broad base of expansion across Europe for this market.
Exactly. It seems quite widespread according to this data.
Okay. Moving across the Atlantic then, North America. The figures there are also substantial, showing pretty robust growth as well. The report shows the market at over $2.2 billion in 2021. That's $253.43 million. Projected for $2.75 billion in 2025, $755.52 million, and forecast to reach over $4.1 billion, $421.84 million by 2033.
And within North America, it's really the United States that makes up the largest chunk of this market, according to the source.
Right, I'd expect that.
U.S. revenue alone was over $1.69 billion in 2021, with a forecast predicting growth to over $3 billion, $358.33 million by 2033.
Wow, okay, $3 billion just in the U.S.
Yeah.
And the report also details significant contributions from the others, right? Canada is projected to grow from over $326 million in 2021 to over $626 million by the end of that forecast period. So, again, strong and pretty widespread growth across that continent, too.
Seems to be the pattern. Now, looking towards the east, the Asia-Pacific region, this is described in the report as being particularly poised for, rapid growth.
Okay.
Its market value was over $1.4 billion in 2021, $1,418.05 million. It's projected to hit $1.86 billion to 2025, $863.45 million.
Yeah.
But then it's forecast to climb dramatically to over $3.2 billion, $213.59 million by 2033.
So while starting smaller than Europe or North America, that growth rate sounds incredibly steep based on this data.
It really does. More than doubling in that forecast period.
And where are the drivers for that rapid expansion coming from, according to the report? China's a key one, I assume.
Exactly. China is highlighted as a key driver.
Yeah.
Projected from $386 million in 2021 to over $940 million in 2033.
Yeah.
Yeah, more than doubling there.
Right.
Japan's market is also forecast for very strong growth from $285 million to over $636 million.
Okay.
And India also shows significant potential, expected to rise from $202 million to over $514 million by 2033.
So substantial increases across those major Asian economies.
And the source also mentions other significant markets in Asia-Pacific: South Korea, Australia, Singapore, the broader Southeast Asia region, Taiwan.
Hmm.
They're all projected to see substantial revenue growth through 2033 as well.
Okay.
So this, widespread activity across quite diverse economies is likely a key factor behind that region's high projected growth rate.
Makes sense. All right, shifting south then. The market in South America also projected for steady growth, according to the source, but maybe at a more modest pace compared to some other regions.
Yeah, that seems fair.
Yeah.
The forecast shows it going from $386 million in 2021 to $428 million in 2025, and then $527 million by 2033. Steady, but not quite the explosion seen elsewhere.
And Brazil leads the way there.
The report highlights Brazil as the leader in the region, yeah. Its sales revenue is expected to rise from $171 million in 2021 to over $237 million by 2033.
Okay. And the source adds, Argentina, Colombia, Peru, and Chile are also set for steady market expansion over that forecast period, contributing to the overall regional picture.
Correct. Consistent growth, if not dramatic.
Got it. What about the Middle East? The report shows a notable growth trajectory there, too.
Sales revenue was $414 million in 2021, projected to increase to $484 million in 2025, and then $668 million by 2033.
Yeah, that's a solid upward trend as well.
And key markets pointed out in the source include Saudi Arabia, forecast from $125 million in 2021 to over $198 million by 2033.
Mm-hmm.
And the report also notes the UAE and Turkey represent key markets there, too, with their revenues also projected to grow substantially between 2021 and 2033, so indicating strength in that region's luxury sector as well.
Right. Okay, finally, let's look at Africa. The source anticipates this market expanding from $491 million in 2021 to $607 million in 2025, and reaching $838 million by 2033.
So, again, showing a consistent growth path, albeit starting from, a smaller base in some of the other regions we've discussed.
And according to the report, South Africa is the continent's largest market.
That's right. Its 2021 revenue was $243 million, projected to grow to over $419 million by 2033.
Okay. And Nigeria's market is also shown on a growth path, expected to increase from nearly $100 million in 2021, $99.7548 million, to over $169 million by 2033, according to the source.
Yeah, highlighting, expanding opportunities on the continent, too.
Okay, so let's try and synthesize what these numbers from the report are telling us. We've got a global market projected to grow significantly, nearly doubling over the next decade or so, reaching over $13 billion annually. Europe is currently the powerhouse, the biggest market by revenue, and it's expected to keep growing strongly.
Right.
However, Asia-Pacific really stands out with the most rapid projected growth rate, driven by places like China, Japan, India, suggesting maybe a shift in the global distribution of this kind of luxury spending.
That's a key takeaway, yeah. Europe's the largest now, but Asia-Pacific is showing particularly rapid projected growth according to this data.
North America remains massive, dominated by the U.S., but with solid growth across Canada and Mexico. And even regions like South America, the Middle East, and Africa, while smaller in total value, show consistent and significant expansion. So this doesn't seem like localized growth. The report suggests it's a pretty widespread phenomena.
Absolutely. That seems to be the core message from these figures.
Right. So you've seen the numbers across the globe and in specific countries pulled from this report showing this widespread and, frankly, significant growth in the cruising mega yacht market. What does this consistent expansion across multiple continents suggest about maybe global trends in wealth accumulation or luxury spending habits over the next decade, just based only on the projections laid out in this specific source?
Well, the report certainly paints a picture of a growing appetite for this high-end luxury item worldwide.
Yeah, this report clearly indicates a growing market for cruising mega yachts globally, with specific regions and countries really poised for significant expansion.
And considering these consistent growth forecasts across so many continents and the sheer scale involved by 2033, it does raise an interesting question, drawn just from this source material. How might the continued expansion of this particular luxury maritime sector influence, say, infrastructure development, in coastal areas and ports around the world?
Good point.
Or maybe impact the global tourism landscape?
Mm.
Or could it even serve as, an indicator for broader economic shifts in the coming years? What sort of developments might we actually see driven by this projected increase in mega yacht activity? That's something to think about. Okay, let's unpack this. Today, we're diving headfirst into, well, a world that operates on a completely different scale of luxury, isn't it? The cruising mega yacht market.
Floating palaces, really. Incredible engineering.
Absolutely. We're talking the absolute pinnacle of personalized experiences. So our mission here in this deep dive is to cut through the noise and give you a clear picture.
Yeah, get a handle on the key drivers, what's holding it back, the restraints, and importantly, the big trends defining this super premium sector right now.
And we should mention our insights are guided by fresh analysis, specifically pulling from the latest research by Cognitive Market Research.
That's right. Think of it as your shortcut, helping you get up to speed quickly on an industry that's, well, often hidden but incredibly dynamic.
Perfect. So right off the bat, the research seems pretty positive about the market's current state. Smooth sailing, strong winds.
It does, yeah. It describes a thriving sector. And the core idea, as the analysis highlights, is these aren't just big boats.
No, definitely not.
They represent the absolute peak of personalized luxury. They offer experiences, privacy, bespoke service, access that, the source material says are pretty much impossible to get on land.
That makes total sense. So what are the big engines pushing this market forward? What's really driving the growth?
Well, probably the most fundamental driver is just the growing number of ultra-high net worth individuals globally, UHNWIs.
Right.
The report points to significant growth there, especially concentrated in places like the Middle East, Asia Pacific, and North America.
So just more people with the kind of serious wealth needed to even think about this level of purchase.
Exactly. And crucially, it's what these individuals are looking for. They're seeking exclusivity, real privacy, and leisure experiences that are totally bespoke.
Tailored just for them.
Precisely. Built around exactly what they want. And a mega yacht provides that private, customizable world like almost nothing else.
Okay, but it's not only about owning one outright, is it? The report also mentions something about luxury marine tourism.
Yes, that's a huge factor, a really big piece of the puzzle. There's been a real boom in charter services.
Ah, interesting.
Especially in the classic spots, the Med, the Caribbean, but also growing in places like Southeast Asia.
So people can try before they buy, or just experience it without the massive commitment.
Exactly that. It lets more high-end travelers get a taste of the mega yacht lifestyle without the, frankly, enormous cost and responsibility of ownership. That accessibility, even just chartering, definitely fuels the overall market growth and awareness.
Got it. So you've got more potential buyers and more ways for people to engage with it. And are the yachts themselves becoming, well, more attractive too? Is tech playing a role?
Oh, absolutely. Innovation in design and tech is a major, major driver. The research talks about things like hybrid propulsion systems.
For efficiency.
Efficiency, exactly. Also, using lighter, stronger materials in construction and really sophisticated advanced navigation technologies.
And the payoff for all that innovation isn't just about performance, is it?
No, not at all. It translates directly into better fuel efficiency, which matters, enhanced comfort on board, and increasingly important, improved sustainability.
Ah, the green angle.
Yes. And that last point really resonates now, appealing to buyers who value both top performance and being more environmentally conscious.
Okay, so we've got wealth, tourism, and tech pushing things forward. But every market has its challenges. What are the big hurdles, the restraints the research points to?
Well, the elephant in the room, perhaps the most obvious one, is just the incredible cost. It's a huge barrier.
Yeah, this isn't exactly an impulse buy. We're not talking about a sports car here.
Not even close. The initial price tag, tens of millions, easily running into hundreds of millions of dollars.
Wow.
But the really significant restraint the report emphasizes isn't just buying it, it's the massive annual running costs.
Right, the upkeep.
You've got staffing a full crew, which is essential, rigorous maintenance, docking fees, especially in prime spots, fuel, insurance. It all adds up incredibly fast.
So these ongoing costs basically ensure ownership stays limited to, well, the absolute global financial elite.
That's exactly what the research suggests. It really underlines the exclusivity.
Okay, beyond just the sheer price, what other headwinds is the market facing?
Environmental and maritime regulations are definitely becoming a bigger factor. We're seeing stricter global rules.
Like emission standards.
Exactly. Things like the IMO, the International Maritime Organization, emission standards are tightening, and there are more laws around marine pollution.
And how does that play out? Does it make them harder to build or use?
Both, really. For the builders, it means manufacturing gets more complex, potentially more expensive to meet these standards. For owners, it might limit where they can actually take their yacht.
Especially sensitive areas, I imagine.
Precisely. Ecologically sensitive zones or newly protected marine areas might become restricted or off limits.
And then there's just the practical side of things, right?
Yeah.
Boats need good weather, seasonality, and location limits.
Right. That's inherent to yachting. Unlike, say, a private jet, yachts are tied to favorable weather and specific cruising grounds.
So they sit unused for chunks of the year.
Their usability definitely drops significantly during off-peak months or in regions where conditions just aren't right. That impacts the overall value proposition, compared to assets you can use year-round anywhere.
Okay, so powerful growth drivers met with serious challenges around cost, rules, and practicality. Looking forward then, what trends are really shaping where this market is headed, according to the research?
One really dominant trend is what you might call extreme personalization.
Going beyond just picking colors and fabrics.
Oh, way beyond. The demand is for yachts that are truly unique expressions of the owner, complete reflections of their lifestyle, their tastes.
What does that look like in practice?
Well, it means things like totally custom interior layouts, maybe integrating specialized features like wellness suites, private gyms, maybe even dedicated galleries for art collections. And seamless tech integration, smart lighting, home automation, bespoke entertainment systems. You're seeing builders collaborate much more closely with high-profile architects and interior designers to deliver this hyper-bespoke level.
That level of detail sounds incredible. And speaking of choices, you mentioned sustainability earlier as a driver, but it sounds like it's becoming a major future trend too.
It absolutely is.
Yeah.
It's moving from being a nice-to-have to, for many, a core expectation.
Really? Even at this level of luxury?
Yes, there's a definite growing emphasis on eco-friendly practices. You see more integration of solar panels, adoption of hybrid or even fully electric propulsion where it makes sense, and a focus on using responsibly sourced materials.
Interesting.
And the report notes that often it's the younger generation of UHNWIs who are really pushing this demand for environmental responsibility, even in their luxury choices.
That makes sense, reflecting broader societal shifts.
Yeah.
And lastly, technology, it sounds like it's doing more than just helping navigate.
For sure. Tech is fundamentally enhancing the entire onboard experience. It's not just about getting from A to B safely anymore.
How so?
Think AI-assisted navigation for smarter, safer routing, maybe collision avoidance. Think IoT-enabled systems for monitoring everything on board, surveillance for security, and crucially reliable, high-speed satellite broadband.
Staying connected anywhere.
Exactly. Seamless connectivity no matter how remote you are. All these things elevate safety, entertainment, and just the efficiency of operating the yacht.
Okay, so let's try and tie these threads together from the research. The cruising mega yacht market seems to be sailing pretty strong, powered by growing wealth and that desire for unique luxury.
Right, amplified by that growth in high-end tourism and chartering.
But it is navigating some choppy waters, the massive costs, the increasing regulations.
Definitely headwinds. And while navigating those, it's being fundamentally reshaped by this powerful push towards, well, extreme personalization, a much bigger focus on sustainability and all this integrated tech.
All drawn from that cognitive market research analysis. It really paints a picture of a market that's both, steeped in a certain kind of tradition, but also evolving incredibly fast with innovation.
It's a real intersection of old world craft and cutting edge technology.
It really is. So that leaves us with a final thought, something for you, our listener, to mull over based on this deep dive. Given this incredible mix we've discussed, the fusion of technology like AI navigation and seamless connectivity with this intense demand for extreme, unique personalization of these floating palaces, what does this signal about the broader future? What might it tell us about the future of highly individualized experiences and services, not just on the water, but maybe across all sorts of luxury sectors, or even filtering down into everyday life?